Welcome everyone back with another great video. We had a very good question from Joan. She did ask us, I want to buy a car. I already melt down my RSP. Where should I take the cash? This is a very good question because if you're already following the priority sequence of RSPs, it means you're melting them down, you're filling up the tax bracket. What do you do if you have an extra lump sum? To understand the concept, first we have to tackle what is the normal priority sequence for withdrawals in retirement.
Yeah, when we're talking about withdrawals in retirement, the first thing that we're going to say is we want to get rid of those registered accounts, the ones that are the highest tax rates. So the RSPs, the RIFs, LIFs, PRIFs, whatever the case may be, the alphabet soup of that, those are the ones you want to get rid of first because it's pure income to you. You're taxed specifically on that as if you were earning it that way. So those are the ones we want to get rid of first. After that, you want to start taking a look at those non-registered scenarios. Again, this all has to fit within your plan. That's the main thing to deal with first, is making sure you have the plan and that it fits in there. Then you want those non-registered assets taken because there's slight amount of tax there. So that's going to help out there. Then you want to take the TFSA. No tax taken off that. That's the last pool you want to draw from because you don't have to worry about the taxing. So there's that sort of scenario where it is. Again, when we're doing this, we also try to keep underneath that OAS clawback number so that you can still collect all your full OAS. But again, these are all the priorities that we want to deal with on the withdrawal.
Yeah, it's a high-level review of kind of the RSP meltdown or the priority sequence when doing withdrawals. As you just mentioned there, filling up the tax bracket, trying to keep under the OAS clawback. If someone is not already doing that,
that's right.
Great place to take the money when you're doing a lump sum withdrawal. So if you're not already doing that sequence and you say, hey, I need to buy a car, I'm going to help out my grandkids with a down payment for a house, well, then you could take that lump sum perhaps from the RSP if you have the room within your tax bracket, or maybe partial. Maybe you need 20 grand and you have 10,000 room from the RSP, so you take it out of there and then take the rest from a different account.
Exactly.
The idea being, if you're not already filling up the tax brackets, doing the meltdown, you could use that scenario for the lump sum. However, in Joan's case, she's already doing the meltdown. Tax brackets are already full. So we'll get to her priority sequence in just a second. But first, if you have a question, just like Joan, how do folks get a hold of us?
Go to chatwithclintonandkevin.com. If you want more questions on what large withdrawals from retirement, how you should be handling it, depending on your situation, by all means, send that in. Or if you have any other financial matters you want to take a look at, send the questions in. They go directly to Clinton and myself. We're the only ones that are going to be dealing with it. We'll get back to you quickly, and we hopefully will be able to help with your situation. But that's not all. You can also go to the website and find what?
Our newsletter. You go to beckerorr.com. It'll prompt you for the newsletter. If you want to get more tips, just like in this video, we send a newsletter roughly once a week, so you can sign up to receive those financial tips. Also, we do a couple of free webinars per year.
Yes, we do.
We invite the folks that are part of the newsletter community. So if you want to get access to the free webinars, sign up for the newsletter. You can get a hold of it on the beckerorr.com website. Joan's situation, already doing the RSP meltdown, already filling up the tax brackets. She needs a lump sum to buy a car. What is her priority sequence?
Well, all of a sudden now you do not do the typical withdrawal priority. You reverse it. You flip it over completely. Since she's already maxed the tax bracket out for where she wants to be, we do not want to give her any more income. We don't have to have any of that. So we're going to draw from the TFSA. That would be our first place, because anything you take out of there, that 20 grand, if that's what she needs, it goes straight to her, no taxes whatsoever. She gets the car and she doesn't have to worry about paying any more to the government. Now, if she doesn't have that in her TFSA, or if she doesn't want to take out of there, you can always then look at the non-registered account. There may be some tax consequences if you get a capital gain or some dividends or something that's been paid. And again, if that's not going to be an applicable option, then you'd have to go to those RIFs and LIFs. But now all of a sudden, more taxes paid, everything else, that's the last place that you really want to draw from.
Yeah, so we reverse the priority sequence here.
Exactly.
Because she doesn't need any more income. You're trying to minimize the tax rate here for this lump sum. And then the good news, if you do use the TFSA, you can always replenish the withdrawal. So if you take money out, let's say to buy a car, well, in the following calendar year, you could replenish that room, top up the TFSA yet again, because it is very flexible. So a quick recap here. You always want to make sure it works with your plan. That's the first step. Make sure any of the big withdrawals fit within the plan. And then if you do have room from the RSP, so you're not already doing the meltdown, you could take some of that lump sum withdrawal from the RSP. If that's not the case, you are doing the meltdown, well, then you reverse the order. You look at the TFSA or perhaps the non-registered account to meet that withdrawal need. If you like this video, certainly like the one floating on the screen now, all about how to safely draw down from your portfolio in retirement, click on that one. We'll see you again very soon.
Take care.